What's going on, guys? Welcome back to another case study. Today I'll be covering Euro on the higher time frames, kind of breaking down what's been going on this week and last week, where we could be heading to next. I'm sure this can be a little bit informative for you guys. So yeah, let's get right into it. So starting off on the weekly, okay, I'm usually not on these time frames, but now that price action is starting to look cleaner and cleaner and cleaner, I'm quite convinced on direction on the higher time frames now. So yeah, starting on the weekly here, you can see big sell-off after taking out this high and also this high to the left. Let's make sure all these are visible. Cool. Big sell-off. Where did we go to? Right to all these lows. Perfect. And swept them nicely. And what does that now do? So from high to low, retail sees this as, right, their BOS. So every single time they get a pullback into these areas, they're selling, selling, selling. With that knowledge, where can we expect price to run to? This high. Okay, this is where seller liquidity will be. So any positions that are taken from the higher time frames, on the way up are easy holds to here. Okay, I'm 90% sure. So another confluence. I hop on the 3-month. It's kind of wild, but look how we have taken that 3-month low, and that seller liquidity high that we were just talking about is this high up here, right? So classic, take the low, hunt for the high. So you have this whole range essentially to deal with here. All right, so another good confluence. But yeah, look how when we took the lows, price was squeezing, squeezing, squeezing. Why? Well, because lots of selling pressure from retail expecting price to continue to the downside are coming from these areas, right? So here they want to sell. Okay, up into here they want to sell. So lots of liquidity is being built here. Okay, it also tricks a lot of traders because why? Once this high is taken, they want to see these lows gone. But I'm gonna say this now. I believe strongly that these lows will hold for the future now, and we're going to continue moving bullish to the upside. Okay. Now, as for today and this week, a little more intra-week kind of price action. Okay, so what was this, last week, I believe? Yeah, last week, Monday, printed this high in the market, and then we had a sell off, okay, taking out some internal liquidity to the left, but still not being able to identify where price can head to next because we didn't have any of this price action printed yet, right? So continue waiting. We get this low printed in the market, okay? Market comes up, respects the highs actually, leaving equals, sell back off, taking the lows, okay? What does that now tell me? Well, sellers are induced, okay? And what do we leave at the highs? Well, if you go on the 15, you might be able to see a little bit better, but look at this buildup of liquidity we left at the highs. So look how we hunt the lows. We get reaction up, pull back to the extreme, mitigation of a liquidity block down here. Mitigation, and we run all the way back up to the highs to take out those sellers. Now that we've taken out that high, what does that now do? Well, this induces buyers in the market, meaning they're going to be interested in buying the lows now. Okay? Market prints these highs here, again leaves equals. Okay, leaves equals. We get a sell-off in London. This is on Thursday of last week. Going into early New York, we print this low in the market. Now we have liquidity to the downside. Okay, so essentially London builds liquidity for New York to take out. All right, and where did this bull run into? Go to the daily, just because I don't have the indicator on this chart, but look how we hunted daily high. So we take the daily high and come right back down to the daily low. Okay, so again, just like we were talking about in that 3-month at the beginning on that higher time frame, you have this whole range here. Okay, we took the high and hunted for that low. Liquidity to liquidity, which was this big bearish move. All right, so we take that daily high, big move to the downside. Look how we stall at the lows to induce buyers. And then finally, we take them out. Okay, let me get rid of this. We take out the buyers. Now look how, again, we're squeezing, right? Look how we have this choppy price action. Retail thinks momentum is to the downside, so they're going to be selling. They want to sell here for it to go down. Nope. They want to sell here for it to go down. Nope. Again, here. Nope. So it keeps going up, up, up. Where are we going to have lots of liquidity? Simple stuff right at the high. Okay. So just by using the hourly here, look at these entry points we could have had. Okay. So number one could have been something down here, maybe in the lower time frames. Another opportunity down here. Another opportunity down here. Okay. These are all opportunities given to us from the higher time frame. So if you were able to take any entries from the lower in these areas, this is a great hold to here. Okay. Not only to here, but you can leave partials to this more structural point. You can call it up here. Okay. Now, as for today, we had CPI, big move to the upside. No entries, honestly. There was, let me see if it shows now. No, it doesn't. Honestly, some funky stuff's going on right now with Forex.com again, so I'm not really sure. But you can see how we have this imbalance here. I had this marked out, waiting for CPI to come down, spike through it. Then you kind of have this hourly liquidity block here, right? Something like this. And you can see on the 15-minute, CPI didn't spike down there either, but watch this. We go on the 5, and CPI spikes right into it. So some time frames are showing one thing, some time frames aren't showing the other, so it's kind of trippy right now. Honestly, after a big move like this happens, you have a 90 pip move within 5-10 minutes. There's going to be no entries the rest of the day, so just hang on, stay patient, wait for the next day. I'm going to be honest with you, it's Tuesday, so Wednesday is going to come tomorrow. Most likely going to be a slow day for Wednesday. See what we see on the hourly. We have some 1 hour imbalances we might come back and tap into. But after, again, a big move on the higher time frames, now we're going to see liquidity built up again. And yeah, that's what my prediction is as for Wednesday. Thursday and Friday, I'm not too sure yet, so we'll see. But yeah, I wanted to put this video together for you guys. Also, if you can just take a look, I mean, look at the amount of liquidity we got to the upside here, right? One more thing I can point out is on the higher time frames, we have a inducement high at the highs here. So what we can probably expect is when price runs to this high, maybe false reactions and then continuation, right? Because again, this is a liquidity block here. And what can we expect out of liquidity blocks? Reactions to occur, whether it's pro trend or not pro trend. Usually these, I can't even speak. Usually these will provide reactions. And in this case, I believe it'll be a false reaction to engineer liquidity at the highs, something like this. Boom. And then we can buy into it. All right. But that is essentially what I see on the higher time frames. What do we got up at the highs here as well? Inducement high, which is interesting, right? It's a long ways away. These are highs all the way from December 2020. And then you can also honestly just grab this as equal highs. So if EU keeps running bullish, that tells me the dollar is going to go to hell, which kind of matches up with what's going on economically now in America, right? So interesting. We'll see what the next couple of months do. But yeah, this is my whole perspective on the more higher time frame look. Hope you guys enjoyed, and I will see you on the next one.